Hello, everyone. This is Janko with QX Financial. I want to welcome you all back. Today we have a very exciting interview with a good friend of mine. His name is Terrell Engelman. Terrell is one of our advisors here at QX Financial, and he's going to share some ideas with you about term insurance versus whole life. So, Terrell, welcome. How are you today?
Doing outstanding. Thank you for asking. Another beautiful day in the week. Thank you for sharing this opportunity for me to come on here and talk with you.
Of course, of course. So, Terrell, you wrote a small article, a little blog post for a website called "Should I Buy Term and Invest the Difference?" And I know that's an idea that is out there that a lot of people have that are using. So, do you mind tell the viewers a little bit about what term insurance is, and when they say invest the difference, what does that mean?
Yeah, of course. Thank you, Janko. Obviously, term is exactly what it says. It's going to give you a very specific limit, usually operating in 10, 15, and 20-year increments, where it will give you coverage for that length of time. But after that length of time, it's cut off and there's no longer made available to you unless you requalify. And we could go into that another day, but that's the specificities with term. Now, investing the difference has been kind of this idea that's been around, well, I would say, since the mid-90s. And we have a lot of people who have made this idea famous that instead of putting all your eggs in this basket, that you'll make more money investing the difference. Lucky for us now, it's been, I think, about 30, almost 40 years of this idea being put into practicality and application. And we have seen that everything that was kind of told to us hasn't added up, as far as people staying committed to taking that difference and putting it in the market, as much as they were going to put into the other policy. And then just the numbers from the market being volatile, going up and down. I'm sure more people will understand it and agree with us now this past year. And then also the fees that are taxed into that. So you start tacking on the fees, the volatility, and the unable access to your money. Is it really worth investing the difference?
You're making a very good point there.
Thank you.
Correct. So you said there that term insurance only goes for an X amount of time, right? So what happens to that benefit or that protection, let's say after the 20 years? What happens with that?
It's gone. Everything you put in there is gone. That money you invested is gone. And unless you died, all the money you put into this vehicle is now useless.
Right.
And that's probably a podcast for another day, why term is not a bad vehicle, but it probably wouldn't be our number one vehicle we want to put or encourage a client to get.
Right. So it sounds like the worst case scenario for a lot of people is that my protection is gone after 20, 30 years and my money hasn't performed, or I didn't invest the difference as I should have because I spent it. It seems to me that will be the worst outcome.
Correct. And then, if we add in the sugar on top is, okay, now that your 20-year term ran out, your money hasn't performed as good. Well, how are you going to cover yourself now? Because probably at this age, you're either unapprovable, right? Or the cost now for this insurance will be so high, it's not worth it. So
Right.
This is a lot of times why we try to lock in a whole life earlier in life so they get a level cost for their policy.
Right. Now, a lot of people will say, I assume, well, so I can just buy the whole life, so I'm getting the whole package, so to speak. But, whole life is not going to give me a good return. Would you agree with that?
Of course, I would not agree with it. But I mean, first we'd have to define what is a good return. That's going to be different to each person. One thing we can, and that we talk to a lot of our clients with is, what other investment vehicle can give you a guaranteed return? I don't know of any. And, I've been looking and driving in this financial world for some years now and talking to all these different people on different sides of the, you could say on different sides of the fence. But for that main point is you get a guarantee. And I think right now people are looking for safety and guarantee in these uncertain times. So it's a vehicle you're going to get a really good return on, depending what you call good. We'll say, 5-6% guaranteed. I think that's pretty good. I don't know too many banks that are offering you half of that.
Right, exactly. Okay. Now, you mentioned in the article also that there are some tax advantages of acquiring whole life. Obviously, it's a short video. We don't have time to get into all of it, but do you mind briefly talking about some of those potential tax advantages?
Yeah, I think, I'll use myself as a perfect example. Like most people, when they hear life insurance, whole life, whatever, doesn't matter, they think I'm going to die and someone gets money. And you never think about the details. Like most things, until you understand the details of what's going on, you don't fully comprehend, whether it's a sport, a job, a vehicle like this. So understanding that you can grow actual tax exempt money in this account and then not only grow it, but use it. And I think that's the part people forget most, is having the liquidity access to your money. So the ability for myself to, okay, I'm growing 5-6% guaranteed. Well, hey, I can also now, because X comes up, I need to go on vacation. X comes up, I got to buy my kid a car. X comes up, I got to pay for a bill. I now have access to this money. And then, like you said, we don't have so much time, but, we like to talk about that two-way street. I can access my money without losing the ability for it to grow. I think that's what a lot of people don't understand, and it takes some time to really show them that concept of a two-way street, how your money can grow and save and be in the safe place, but at the same time be able to leverage and use that money.
Correct. Okay. And one last question on this. Um, I guess also some of the critics will say, well, that might be true, but those dividends are not guaranteed. What would you say to that?
They're correct. Dividends aren't guaranteed. Either is a return in the market guaranteed. But what we can tell you is, and once again, you have to know the company you're working with. So this is where we come in and tell you should be working with a mutual company. But most mutual companies, especially the 5-6 here in America, have paid dividends without question for almost 100 years. So when you're with a company that has these track records, have been around through good and bad times, I mean, we talk about that. We look 100 years, right? We're talking about the pandemic we're in right now. This goes back to that 1914 plague, right? This goes back to World War I. This goes back to World War II. This goes back to all of these things that they didn't miss paying a dividend. I don't think they're missing paying a dividend this year. So with all that being said, I mean, I think I'll take that risk over putting it in the market.
I think that's a great point. Yeah, we have, as of July 30th today of 2020, we have north of 35 million people unemployed. And I think it was on the news today that the economy contracted almost 30% since April. Yet, you're right, companies are paying a dividend this year. No question about that. All right. Well, for you guys that are watching this, naturally, we cannot answer every question or attack every angle of this topic in this short video. We just wanted to give you a quick introduction of this concept of buying term and invest the difference. Is that suitable? Is that still sustainable? Are there any other alternatives? All those are great questions to ask. So if you guys would like to reach out to us, you're gonna see all of information below. Right below the description, you have our email, website, all our social media pages, contact information. Feel free to subscribe as well, so you continue to get these small videos with information for you guys. But with that being said, Terrell, thank you for your time, and hopefully we'll have another conversation again soon.
Hey, I appreciate it. Thank you for the time.
Take care.
All right, bye-bye.